What's your take of these opposing forces that are whipsawing the equity market, certainly today and all week? Which is going to be the stronger force over time?
I would agree with Jamie in the longer term. It's obviously the economy and a couple of things, Tyler. You can't put on a recovery trade and then hope that the recovery never comes so that interest rates stay low. And it's kind of a be careful what you wish for moment. If we do see a 1 million job print at some month in the relatively near future, I mean, I would have a slightly different and nuanced view relative to Jamie. I think interest rates would pop up and that would cause a problem for the equity markets. But we're a market in transition. We're going for wishing for the recovery to experiencing the recovery. And markets, have to digest that reality. We've run up an extraordinary amount. Prices have gotten, way out over their skis to a certain extent until we get confirmation that the economy is going to be as strong as was just suggested. So once we get there, GDP growth, earnings growth, the market will grow back into that. But we're going to have some rate shocks along the way, particularly for those highly levered areas of the market.
Yeah, I mean, talking about those highly levered areas of the market, or at least some of them, I mean, you can make the argument, Jamie, that the disruption trade has been disrupted. That being said, are there areas in tech right now or in some of these momentum areas that are actually good buying opportunities given the pullback, given the correction we are seeing?
Yeah, I mean, I'll deal with two sectors. The first is technology. A lot of people are paying attention to the real momentum trade. I think that the large cap tech stocks like your Microsofts, Facebook, Google are actually better places to be right now. Price to earnings, price to sales, all that kind of, those metrics are not so stretched. I mean, a lot of people are paying attention to electric vehicles. Those are going to be highly volatile throughout the years, no matter what. But I believe if you're an Apple, Microsoft sort of large cap tech person, you're going to be fine buying all the way through. But the other sector that people are buying into right now and think has a lot of legs is financials. People are buying the money center banks. But I think the London Stock Exchange, these exchange stocks are actually more interesting in the financial sector relative to these banks, largely because I feel like there's consolidation. There's the companies like the London Stock Exchange have moat that, they have this, they're building their businesses to become less dependent on trading and more on data analytics and different ancillary services. They have good dividend, good cash flow. I think those are really good spots for people to pick apart as they're trying to decide what to do in these volatile markets. I think that's what you're going to see play out, both in financial sector and also in tech.
Shepard Smith here. Thanks for watching CNBC on YouTube.